Welcome to another Capital Gains Tax Solutions and also Expert CRE Secrets podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated businesses, cryptocurrency, eliminate the need for the 1031 exchange, so you can create and preserve more wealth, defer millions of dollars of capital gains taxes, and invest at optimal timing. Hey, I'm your host, Brett Swartz, and every episode I'm joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He's out of Miami, Florida, and he's a consultant and CTO board member at dealestate.ai. And this is a company that helps real estate entrepreneurs build, scale, and grow cash flow driven properties through syndications and technology. With over 25 years of experience in the syndication world and a proven track record of raising over $60 million, he has a deep understanding of the real estate syndication landscape and the dynamic demands on the market. And also, as an AI and ML enthusiast, he leverages technology to drive innovation and efficiency in the industry and so much more. Please welcome to the show with me, Gabe Barb. Gabe, how are you doing?
All right. Doing good. Thank you very much for having me on the show.
Absolutely. And for our listeners to get to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, sure. So again, my name is Gabriel Barr. I'm the CTO and a board member for Deal Estate AI, and also sitting on the board member of Infinite Capital Fund. That's a real estate fund focused on multifamily. My expertise really, my background is in the finance and tech. So I've been running syndication for the last 7 years, building syndication from the ground up, helping facilitate syndication both in different landscapes, not only in real estate. Raised a substantial amount of money, supporting the syndication, and really, I would say, I wouldn't say an expert. I wouldn't call myself an expert, but definitely enthusiastic about AI and machine learning. That's also part of my background. And some of the stuff we're developing here at Deal Estate and Infinite Capital to kind of foster the entire process. So,
awesome. Yeah. Fantastic. I love it. And so, Gabe, I believe we've all been given certain gifts in this life, and these gifts have been given us to be a blessing and help to others. So I'm curious, like Gabe, growing up, like what was the one or two strengths or gifts that you believe you were given, and how does it help how you help and bless people today?
It's a good question. I wasn't ready for that question, but it's just I think that one of the things that I really took on growing up was I come from a family that all my brothers are actually entrepreneurs and being self-independent, and seeing our folks, seeing my parents as being on a W-2 for many years and almost until retired. It's like they're 83 now, struggling to pension. And then I've made a very clear distinction that this is not going to be the route that I'm going to pursuing. So I think by the age of 30, I branched out. Actually, 32, I branched out and started my entrepreneurial journey. Went into finance, went into different aspects. But once I realized that my strong suit is in the tech and understanding and deep understanding, as the more we're evolving in the tech space, the more I was able to actually get and really help throughout the journey, get to more people, understand the process, bring some innovative solutions, and kind of streamline some of the most difficult process where some of the middlemen were in the middle, was actually creating some blocks. So
got it. Let's dive right into that. And we're talking about using AI to scale syndications with Gabriel Barr, and you can go to dealestate.ai to learn more right now. But let's dive right in, Gabe. So what's the number one secret to using AI to scale real estate syndications?
I think you have to understand the AI is a buzzword right now. It's being used all over the place. ChatGPT, and everybody's I think not everybody, but I would say a majority of the users are now using AI as part of their marketing strategies. But AI has a lot more to it. But eventually it relies on data. It relies on the amount of data that you're able to accumulate and build on the output. Because there's no data, there's no output. So the secret in AI, in machine learning, and AI to AI is the application in machine learning where you have the ability to predict a certain outcome. The AI usage, the application for that is really determined on how good the data that we're able to mine. So for real estate, it's been for ages in the outskirt of the deep tech. When just recently it was just there's more and more news in that, but still not in a way that one can take and use the application to really enhance and scale the business. So what we have done is we realized that there's a lot of friction points in the process where, for instance, finding out the right investors. How do you know if the investors, there's a million investors out there? How do you find the right one that actually you might want to reach out and, there's a greater likelihood for him to join in and participate in your deal? So there's a lot of data points, a lot of frictions that were not addressed throughout the process. So what we've done is we said, okay, let's understand what are the investors going to look like, and what are the investors as part of what's their investment horizon, what's their risk tolerance, how do we know that? So we developed like a gamifier solution, AI gamifier solution, where based on 21 questions that we're able to profile the investors. And based on the profiling, then we use different leveraging methods. And then we're able to identify what asset classes the investors might be interested in, or not only interested, how we should allocate to get the best result, to get the optimized output for him as an investor. Because anywhere you look at on the syndication process, the major stumbling block, the major funnel that everybody is struggling with is capital raising. So if you identify the high maximum friction point on the capital raising side, and you eliminate some of this, and actually you can make it more of a streamline, you can streamline the process, then the raising capital becomes a more of an ease process, and then real estate syndication opens up. So anyone actually with the right business mindset could dive in and really take advantage of that.
Okay, so it sounds like streamlining and identifying the roadblocks that are holding up the capital raising process. And so, how are you specifically using AI to streamline that?
So as I was saying, once we identified the roading blocks, and as well as the understanding of the profile of the investors, now we're using lots of data points that we're able to pick up from the different asset classes and match the investors. And by presenting this matching process, so that's what an AI eventually would do. It will provide you, will pick and choose the right data points that are best attributed to you, specifically based on your analysis. So if you go to ChatGPT and you just ask a question, you get a very broad answer. But if you go to chat and you provide chat with like a 7-year-old, you just train the machine how this is going to be best for you. What are your preferences? What is the business going to look like? What type of ideal customers you're looking for? Then the answers you'll be getting are going to be very much what you should be getting as part of your business objectives. Same thing with investment. So if you're in as an investors, you have to provide the data for the right matching process. Why should you invest in one multifamily, not the other? Why not? Why not invest in mobile park home? Why not invest in commercial real estate, in office buildings? So what really works for you? So when it comes to understanding the investor and how the investor is actually going to work out for them, as far as the best asset classes and the best portfolio base, this is how this is going to play out for them. Then me as an investor, me as an option, as a syndicator, can go out and present to the right investors the right opportunity and the greater likelihood for them to invest, because that's what it is. We want to eliminate as much of the funnel process of getting and convincing investors to join my syndication, as opposed to investing in the stock market and bonds or 401k or whatever. So AI basically enabled us to really eliminate a lot of this process, and by doing that, we're streamlining the funnels.
Okay, yeah. Let me pause you there. So let's do an actual example of this, right? So,
Right.
by the way, I love the idea, right? And we're talking with Gabe Barr here at dealestate.ai. We're essentially trying to unlock and match investors with syndications and deals. So give me an actual real life example of how this has been done. And is it accredited investors? Is it all, what's the average raise so far? Walk me through that.
Okay. So let's talk about the process in general. So anyone can actually go to our website and just click join the journey and fill out the 21 questions that we're able to profile his risk tolerance and investment horizon, and provided with a portfolio base of investment opportunities. Now, this is not tied to any investment opportunities out there. Just in general, we tell you the output will be 20%, put you 20% in commercial real estate, 5% in multifamily and whatever. You based on individual output, you get the individual portfolio-based investment. So we call it like personalize your REIT. If we look at a REIT as a real estate investment trust, and usually REIT are blind trust. You give the REIT your money, whether it's a public or private. You give them your money, and they invest wherever they think might be good for the REIT. But when we personalize the REIT, make it your decision, and customize your ability to work out your own REIT, so to speak. It's not a REIT, obviously, but it's a very lookalike REIT. Then the output, and we're able to outperform any other. With your personalized investment, you're able to outperform any REIT by 20-30% altogether. So if we go on the process, let's say we find out that you're unmarried, no kids, you have 40 years for retirement. So obviously the machine is going to look differently on you than with someone at the age of 55 that just about to retire, have some 401k, and just looking for financial freedom, going out for retirement and getting something out of it. So he doesn't have a lot of time. And liquidity is also a major issue. So once the machine understands that, and once we understand what is the portfolio, the personalized and the customized portfolio that is really works for you, then you'll get the actual result. Once you're accredited, this is very, very general. Everybody can actually use it. Once you're accredited, then it becomes we're able to really pinpoint the right examples or the right properties that are out there that can really work out for you that on the market currently. So let's say we have a Texas multifamily value add in let's say in Dallas, Texas right now, 110 units, 110 doors. So if you come as an investor, as an accredited investors, we're able to tell you if this property should be in your portfolio or it should not, based on the output. But that could also work for credit because our fund is a 5 or 6C, and it's a customized fund, so we're not able to advise. We're not able to advise because we're not advisors to begin with, but we're not able to present data, personalized data, to anyone that is not accredited. So you have to be an accredited investor for that matter.
Okay. So, I think this makes some sense. And by the way, I'm on your website too, like kind of going through the get started thing and kind of going to the questions. I like the way you guys have organized that. Do you have any like actual live? So are you guys helping syndicators to build out the systems and the processes to clarify where they're at? Like, let's say I'm a multifamily operator, right? And I run a fund.
Right. Right.
And I have a couple different funds and a couple different, some are more liquid, some of them are less liquid, some of them are longer term, some of them are higher risk. Like I have a building fund, and I have like an existing housing fund, and then I have like a lending fund, right? So
Right.
are you saying you're going to come along to help to streamline which one they should go into? Is that what you're saying? And then give like
Yeah, eventually, when what it boils down to is, yes, this is what it will end up be like that once. And at this point, given that we're not an advisors, we're not a FINRA advisor. Our fund is customized, so we're an exempt fund. We're not allowed to advise you on a specific, investment criteria on each one of the fund, on each one of the investments in our fund. So you'll have to do it. So our system will give you a more generic and more broad relation to the type of investors. But let's this is just one part of the investor criteria. Our facility is really, if you look at who we are in general, so we're a facilitator. We're like we take and we help syndicators just either on the starting line, or they're looking for a way to jumpstart their business, or just getting into the finish line. They're overwhelmed by all the moving pieces, what it's going to be capital raising, what it's going to be lending, find the right properties to begin with. How do you find the right underwrite it, whether conservatively or unconservatively underwriting, and then obviously the capital raise. So there's a lot of moving pieces throughout the process. So what Deal Estate has done is created the YC, the Y Combinator from the tech. So we duplicated a very similar concept to the real estate. So let's say if you want to start a syndication, you want to start, and you're really passionate about owning your own apartment building, for that matter. Okay, so you'll either start looking for some partners, and you'll need some KPs, and you'll go out there and you'll send some offers to potential properties, but most likely you're not going to be getting the answers because you don't have the track record, nor do you have the experience. So when you team up with us, we will come in and help you set up the entire process. This is another streamlining option for syndicators. So whatever you want to scale, let's say we have a syndicator on our team that already has 400 doors. Now he wants to branch out. He wants to open up another region. He wants to up on Texas. He wants to own some pieces, some real estate in Texas. So he would come to us. We'll partner together, and we will basically divert our resources into Texas to bring in another property for him as a syndicator. That is an experienced one. But if you don't have it, then you'll go into an acceleration process where we provide everything for you to succeed in bringing you all the way to the finish line. So you come in, you don't know the property, you don't know how to find the property, you'll learn how to find the property with us, and we'll find the property with you. Now, we're not an educational platform, so we're not going to teach you how to do it. We're going to do it with you. We're coming in as partners. We're actually partnering. We're taking a percentage of your equity throughout for your first business, maybe for your second business as well, if you so choose to continue with us. So if you think about it, that we leverage our tech to help us not only identify investors and really help investors find the right deal for them, we also vet and find the right operators. So now we're involved in the entire process. So we're like an holistic view. We have an holistic view of everything that's got to do. In one end, we're able to bring the operators into the right place and help them scale. For that matter, we're able to actually have get our hands on the data, which is very valuable to us as far as feeding the machine learnings and our machines and the AI. And we're also taking portion of the business. So we're like we have vested interest. We'll invest with you as well. Our fund will come in and actually bring our investors to fund.
Okay. Yeah, I think it'd be good to see like an actual like case study of how this all kind of flows. Like, so are you guys doing like compliance for like to accreditate do accreditation for people like investors if they want to be accredited? Are you doing like
we have to?
Yeah.
We're compliant. All of our investors that go through a fund have to go to a third-party accreditation process.
Oh, but it's not through you guys. You guys aren't doing it in-house. You guys doing a third party?
Yeah, we're not doing accreditation, but it's all done on a
Okay.
third party. Yes, we're not.
Okay.
This is something that we've.
Yeah, I guess I'm just trying to figure out the AI part. So besides like, matching the investors like risk tolerance and their retirement and their cash flow needs and their experience level,
Right.
like I get the the like I like the advanced risk tolerance questionnaires. I think it's what I'm hearing here with AI.
Yeah.
And then you're trying to find and source deals or bring people together, right? So
Right.
I think that's what I'm hearing. So you're using AI to do the match between the syndicator and the risk tolerance questionnaire. Is that a fair summary so far?
Yeah, it is. It is a fair summary. It's definitely what it is. Again, because this is the bottleneck of most syndications, the capital raising. I mean, if you go out, you ask any syndicator.
So how does I get that? But how does it specifically help you to raise capital? Is what I'm wondering. Like what?
Well, again, what it helps us is identifying when we personalize the investment to any investors out there, then we're able to pinpoint the matching for the investor. So if you were, let's say, if you invest in the stock market and you haven't done real estate, most likely your I would say your fluidity as far as ability to invest in real estate would not be as great if someone is already invested in syndication and also have seen some returns and things of that have actually transpired in the right.
Are you specifically, Gabe? Are you specifically like you say you're not an advisor, right?
Right.
So a syndicator comes in and says, "Hey, I want to be a part of your platform."
Right.
Because I want to try to understand risk tolerance more. But let's just say I just do multifamily. That's all I do.
Right.
I raise capital for multifamily, and they go through your process of getting qualified, right? Qualified, and or I guess more like risk tolerant qualified would be a better word.
It's not only risk tolerance; it's also the investment horizon. What are we looking at? Because real estate, multifamily, predominantly multifamily, that's a usually 5-7 year hold.
Right. And so again, but I could be 3 to 7 years, right? It could be
yeah,
3
it could
to
be
5.
3 to 7 years. It could be 2 because you can come in as on the debt side because the option once you're in the fund, you have both debt and equity. You can leverage, and this is actually the beauty about having the ability to understand you as an investor, what works best for you. So if you're looking for high liquidity, then most likely our addition of debt on a short-term debt with maybe 15-14% IRR will play better for you than investing with maybe 20% IRR but over 5-year period. So
yeah. So how are you tracking that? Like how are you doing the metrics? Are like the syndicators reporting to you what they have?
Yes.
And then they're on your platform as like a preferred vendor or something like that?
Since we already own $500 million of assets, so obviously we have access to a lot of data. And every syndicator is actually partnered with us. We are, like I said, we're pulling the data from the syndication, whether it's going to be legacy, whether it's going to be projection, performance, obviously, and the real actual data. So, and the more data we're able to accumulate, so everybody that partners with us, that the first
is it self-reporting though, Gabe? Like, how do I know? Like, if are you investing in the deals? Is it self-reporting? Is there a third-party auditor with the groups that you're on your platform if they're bringing deals to the investors?
Like I said, since we're a fund, we're regulated. So we're SEC regulated. So of course, there's reporting that we're complied by. And so, everything has to follow a very, very rigorous process, whether it's audit, quarterly, or semi-annually quarter, depending on the type of asset class that we're required to report. So all of that is done automatically through our portal. So it's something that, once I think we'll get our advisory license probably within 6 months, that we'll be able to offer additional investment opportunities. But right now, it's given as customized, then you can definitely.
Okay, I think I got a pretty good handle on it, Gabe. And it's talking about Gabe Barr, dealestate.ai. So let's shift into capital gains tax. Some challenges sometimes where people want to get into funds and they don't have an option to 1031 exchange into funds, or they're selling cryptocurrency or a business. It's not like kind, Gabe, and they're wanting to invest into these type of passive opportunities, but they have that huge tax bill. I'm curious, like, what has been the biggest frustration you've seen with people that want to 1031 into funds and are not able to?
I well, I don't know if I can really give you a straight answer on that. This is something that our struggle usually on the 1031 is that we have to find a creative way for them to join in. So in some cases, we're not able to. But the fund allows them the options to diversify. So for 1031, you have to have a very similar matching on for the tax purposes. So as a fund, since we are a customized fund, then we have to find a specific underlying assets. And given that we have plenty underlying assets that are invested, then we might divert them from the fund directly to the underlying assets rather than invest in the fund. So that's usually what we're up
So if
against.
there was a way to defer capital gains taxes, like through crypto or businesses or other real estate or save failed 1031 exchanges, and then be able to invest into your funds, all tax deferred, would that be of value, Gabe?
I believe it will be, yeah.
Yeah.
Definitely.
Yeah. Well, you can learn more about that. We figured this out. We call it the Netflix version of exit planning, and it's using something called a deferred sales trust. And upon the exit of any asset of any kind, you can defer capital gains taxes and then diversify into multiple assets, whether it be funds, whether it be deals actively by yourself, whether it be into real estate or real estate development, whether it be lending, or even, you might go into the stock market. A lot of stuff right now is like 5% for money markets. But it all starts with building a capital gains tax exit plan. If you want to learn more about that, you can go to capitalgainstaxsolutions.com. We just did a $13 million exit for a client in San Diego who are developers who wanted to get a little more passive, wanted to defer the tax, and then went into multiple syndications. And so, again, go to capitalgainstaxsolutions.com to learn more. That being said, Gabe, are you ready for the lightning round?
Yeah, I'm sorry. Yeah.
Lightning round, yeah. All right. Knowing what you know now, Gabe, if you could go back to your 20-year-old self, what's the one golden nugget make sure to tell yourself to do?
Well, I definitely would invest if I'm 20 now, I'll put any dollars, any cent I have into real estate.
Excellent.
That will be my
fantastic. That's good. What's the number one book you recommend or to gifted the most in the past year?
I've read so many books, but one actually obviously Atomic Habits is one of my favorite, but I would also go for 2x is easier than 10x. 2x is 10x is simpler than 2x. Actually, I have it here. Let's see. Yeah, 10x is easier than by
Perfect.
Dan Sullivan. An excellent book. So to really capture the essence of doubling down on what you get at.
Excellent. And the next question is this. What are you most curious about right
now? Most curious to understand where the market's going to go. We're talking about the options of refi in a couple of years, how interest rate is going to go down, inflation. That's where my crystal ball isn't clear yet. So.
Excellent. And what's the number one leadership quote or theme that you strive to live by?
Well, I'll give you one that I've used today. So I will tell you that in a second. Give me that. Here we go. So how you do anything is how you do everything. So that's a quote. So I'm running blank. So yes.
That's good. That's a good one. I like that one. Last question, Gabe. After all the businesses you've built, the real estate you've invested in, and all the people you've helped, what's the number one habit that you use to stay centered in your values and stay encouraged to charge forward to reach even higher heights?
Well, wake up early. 5 a.m. is the best. Meditate in the morning. Do a very, very clear morning routine. And plan your day and have a very clear vision of where you want to go. Because if you don't have the vision, you're most likely going to detour along the way. So that will be my best advice.
Excellent, Gabe. I want to thank you for being on the show, sharing your expertise on how to use AI to scale some syndications. I want to encourage you to keep using your gifts to help people create and preserve more wealth and make it more seamless for people to invest in an optimized way. For our listeners who want to get in touch with you, Gabe, what's the best place for them to find you?
Best to send us an email. Send me an email with Gabe@DealEstateAI or through our website, LinkedIn, Gabe Barr. That would be probably the best. LinkedIn is definitely my favorite
Amazing. Awesome. Well, thanks, Gabe, for being on, big guest on the show. And I also want to thank our listeners. Yeah, I also want to thank our listeners for listening to the episode of the Capital Gains Tax Solutions Podcast, also Expert CRE Secrets Podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. And also sometimes they struggle with how to connect the investor with the deal, right? And raising capital and trying to make it as a seamless way as possible. And so someone like Gabe Barr can really help you out without going to DLC.ai. And if you're looking at exiting highly appreciated assets, we'd love the opportunity to help you out. In fact, we came out with a book talking all about it. Hit #1 bestseller called Building a Capital Gains Tax Exit Plan. And we call it the proven playbook for unlocking your ideal wealth plan when exiting any asset of any kind. You need to have about $1 million net proceeds and $1 million gains. So it's going to be a large enough amount. But we have people like Kevin Harrington from Shark Tank, Don Winter from DLP Capital, a number of others that are amazing folks in the book. But I also talk about how to use the DST to do all of the things that perhaps that you want to do with deferring tax and growing wealth. Go to capitalgainstaxsolutions.com, check out the book, or just go to Amazon to pick up your copy now. So appreciate everyone out there. Please rate, review, subscribe, and give us some love on a like on YouTube. And we look forward to talking to everyone.